Hello and good morning, everyone. Welcome to Almus Market Mornings, your daily dose of financial updates with me, Swaraj and Pankaj Rathi, who will be taking us through the latest developments in the financial markets. I'll start off with the news that EU leaders have agreed to de-SWIFT Russia's largest bank and agree on a ban covering two-thirds of Russian oil imports. While some details of the sanctions are awaited, but it primarily targets oil delivered by sea and includes the exclusion of pipeline crude. While these are just agreements, officials are yet to meet and agree on technical details of the sanction. Pankaj, good morning. What updates do you have for us?
Hey, thanks, Swaraj. Almost 3 months after the initial, basically conflict between Russia and Ukraine, markets would have thought, and the people would have thought that it will get over in 2 days, 7 days, and 7 weeks. It's more than 3 months, and still global governments and global coalition of people, they are still imposing sanctions on Russia, and where the Russia uh, Ukraine are still fighting, but they are looking to how to deflate the higher prices. So I read somewhere that even the Russian government is thinking how to structure things in a such a way that the wheat prices and other eatable prices can move lower. While US markets were closed due to the Memorial Day holiday, other regions saw good risk rally, spurred by news of China opening up the country for more economic activities and also drawing comfort from the US core PC inflation data. We saw a drop of uh, from a previous month, even a consumption held up. However, global yields were lifted. German inflation printed a new record high, and oil prices extended recent gains. This probably oil prices extended recent gains is the news when the sorry. This Russian oil import sanction came again, and it's more than 90% of Russian oil imports, and then moving out the subway bank from SWIFT. That has led to a higher crude oil prices. Uh, that's the reason it all happened. However, basically, US 10-year Treasury yield moved almost by 15 basis point in last couple of days after this news. Inflation in Germany hit another record in May at 7.9% YOY, the highest level since reunification, and indeed since January 1950, almost a decade before the Berlin Wall went up. The upcoming ECB meeting next week assume all the importance. The ECB is clearly past the stage of discussing whether and even when policy rates should be increased. The bank meets on June 9th, next week, Thursday, with the market widely expecting an end to the bank's QE program. The big question is how quickly the governing council decides to move away from its negative deposit rate policy by 25 basis or 50 basis point in one go, and how high it will go before looking to pause. A hike in June will be a surprise for the market, but we might not like to totally rule it out at this point of time. The risk sentiment has taken a slight turn for the worse in recent time. Today, after the news that EU has agreed to ban 90% of Russian oil imports. Dollar weakened more yesterday with upbeat risk sentiment and hit a low of 101.30, which is a fall of nearly 3.5% from the peak season earlier this month. But today morning, again after the EU region, the crude oil and that's impacted a dollar index. So dollar index moved higher. Indian rupee had been stark underperformer and dollar trades just well below the all-time high of a 77.80. Market had been seen a small inflow from FI for a change yesterday. There was general selling from exporter too. Yesterday, FI spot in equity market after a very long time, 500 crores of worth equity. Let's see how it moves out in coming days. But oil companies were strongly bidding dollar at 77.50. Even gains of over 3% in many Asian countries like yuan, Korean won, etc. did not help the rupee. I think the rupee can be only helped by a southward move in Brent oil till that point of time. Uh, Indian GSEC and rupee looks bearish. Indian 10-year GSEC yield also moved higher to 740, almost 7-8 basis higher in a couple of days, along with moving up Brent oil. We do not expect much gains in store for the rupee without help from a lower oil prices. INR might move in the range of 77.45, 77.70. A thrust above rupees 77.70 per USD INR would be more bearish for INR. That's all. Thank you.
Okay, thank you, Pankaj. And as Pankaj mentioned, China is opening up. We also saw the German inflation printing a record high, while we also have the ECB meeting next week. So a lot of action coming in for the markets. That's it from our end. Have a good day, everyone. Keep managing your risk. We'll see you all tomorrow.